missed something.
Yeah,
Okay, it's recording, it says. Interesting. Yes, it is recording as far as I know.
yeah, it should be.
Okay, well, I didn't even really touch anything, so that's good. And how do I let attendees in or are attendees in?
It's already started. Yep.
Okay, I guess I can go ahead and start then, maybe. We'll wait a few more minutes. Uh, let's see. I guess I'll ask the question, if you're out there and you're an attendee, if you want to let us know you can hear us, that would be great. Maybe something in the chat box. Oh, there's a thumb up, so there you go. Appreciate that. Appreciate that. We've got just a couple of minutes and then we'll get started. I'm not usually the host of these things, so if any technical glitches happen, you'll understand why or why I'm asking if you can hear me. But I appreciate it. Looks like JD, you let me know that you can hear, and I appreciate that very much. So we'll get started in about 3 minutes, and we'll take it from there. Perfect. Yeah, it looks like our attendee list is bouncing up rapidly now.
Yeah. I guess just as a sort of for our perspective, you all can respond in the chat, I guess, if you've joined one of these webinars before, or if this is maybe your first time on one of these webinars,
Ah,
and or how did you hear about the webinar?
yeah, that'd be great. Any first timers out there, and how did you hear about us before we get started is the question. It's a Q&A.
And
Yes, I'll type an answer to this guy.
that's on, is that forestrywebinars.net?
Yes. First timer.
Very
Okay.
good.
Guess the only other hat trick I have is sharing my screen, and I know you can share your screen, so we're probably pretty good.
Yeah.
And we'll start in about 1 minute.
Now, I'd probably say if you've got questions about the content that we covered during the webinar, if you'll put those into the Q&A section of your Zoom window, that just helps us keep up with those questions a little bit better, and then we can make sure that we've seen them and then respond to them. And there may be some at the end that we might ask you to email us or something if we haven't gotten to your question, if we run out of time, or if we need to do a little bit more digging on that particular question. So just as a heads up about that, but if you've got content questions, probably ask you to do that in the Q&A there.
Right. All right. Almost 1 o'clock. And it is 1 o'clock, exactly. So we will go ahead and get started. I want to welcome everybody to the webinar today as we talk about Hurricane Helene disaster and timber tax strategies for landowners. I'll introduce myself really briefly. I'm Kurt Smith, an assistant professor of forestry and extension specialist at North Carolina State University. And Kevin, if you want to introduce yourself or just wait till you come up, I guess either way is good with me.
Yeah, I'm Kevin Burkett. I'm an extension associate with Clemson University. I work with our farm and agribusiness program, and then do a decent amount of work in the tax area with our Clemson tax schools as well.
Great. All right. Thank you, Kevin. And you all will be in for a treat to get to hear a lot of Kevin's wisdom on tax strategies. So I guess we'll go ahead and get started. I also want to just mention we have a hard deadline to stop straight at 2 o'clock. But if we get your questions, and also if you want to email us things post webinar, you can do that. Also know that this is being recorded. and you can access this and review the webinar, associated links and emails, et cetera, et cetera. So I'm going to go ahead and attempt to share my screen. I think maybe, let's see, and share. And I don't know. Can you see my screen right now?
Yes, I do. It looks
Okay.
like it's on slide 13.
Oh, all right. Let me see if does that work better?
Yeah, it looks like slide 1.
Slide 1, okay. Well, like I said, everybody, I'm a little bit new at hosting a webinar, but appreciate your patience with me. And we'll go ahead and roll through a few slides, and I'm going to pass it over to Kevin. Always do kind of a qualifier. I'm sure Kevin does too. Maybe this will count for both of us. When we do webinars, both of us are professionals in our respective fields, but this is intended strictly to be informational and educational. You really want to, with your specific case and any advice you might sort of glean from our educational presentation, you really want to go see a financial expert, tax expert, or seek an attorney for legal advice. So kind of our disclaimer, pretty standard. So I wanted to kick off a little bit and talk about Hurricane Helene, which hit us in North Carolina, which is sort of my interest. Kevin's in South Carolina, but y'all have experienced very much a similar catastrophe, if you will. Hurricane Helene brought 45-mile-an-hour winds, gusts over 70, but maybe the key thing is the precip that came with it. In some areas of the mountains experiencing up to 20 inches of precipitation, which when the ground soaks like that and a little bit of wind, if it has that much water in the ground, you have blowover conditions. And that's essentially the forestry and the timber damage that's been experienced in our North Carolina, our western North Carolina counties. Here's a few photos that show some of the rather significant damage. This is all blowover, recently taken from a flyover probably about 3 days ago. And also a little bit about the damage distribution. Most of it, as you might imagine, just as land holding patterns for forestry owners east of the Mississippi. Most of it happened in private land ownership, 78%, private individuals, corporate ownership, et cetera, and about 20% of it happening on public land. So a little graphic that just shows the track of Hurricane Helene. You can kind of see how it drifted up. Really a tropical storm, but the significance with it is the rainfall along with the wind. And this is a highly irregular weather pattern for the mountains of North Carolina. And I guess I should start saying Appalachia in general. This includes Kevin's area of Clemson as well as Georgia and other places. Within North Carolina, we have so many counties impacted, probably 15 or 20 or more, but really the most heavily impacted counties have been Avery, Buncombe, McDowell, Mitchell, Henderson, and Yancey. And there's a table up there that just shows the relative damage amounts, but you can clearly see, this is another map I'm showing coming up. You can see the heavy damage is in the darker color. And you can see by far that's capturing those counties that I showed on the previous slide of Avery, Buncombe, McDowell, Mitchell, Henderson, and Yancey. So how do you recover from these kinds of things? What are some things that you as forest landowners might consider? Obviously, we know this is still a time where most folks are still reeling and trying to figure things out in the most sort of elemental way. But the more you get going on it, the more knowledge that you can acquire, I think the more it'll reduce your stress. And a great starting point, obviously, would be to get a consulting forester, or in the case of North Carolina, talk to a North Carolina Forest Service county ranger. They can give you a lot of advice, possibly a site visit, to look at your damaged timber. So how to evaluate that? Obviously, timber can still be utilized when it's on the ground, but it's almost like lighting a fuse. The longer the timber stays on the ground, the more the value of the timber goes away. So it's very important to figure out and do what you can with that timber as quickly as possible. Also very important to document. So take pictures, photographs, save a copy of your local newspaper clipping, and definitely photograph your storm damaged timber, potentially for other relief programs that might be coming down the road. Kevin and I were sort of speculating about what that might look like in our area. And always good to use a professional forester during the process. So selecting salvage timber can be really difficult, but you really want to look. I guess a couple of things. It's one thing not to paint a good picture necessarily or unrealistic picture. The market will be flooded with so much wood in a short amount of time. Basic economics, that's going to drive down the value of timber if you could even find places to sell it or find viable roads to move it. So that's sort of a cautionary tale, I guess, of thinking you can convert the down timber into money. But you should definitely be seeking to do that and trying, going with the most merchantable timber first. There's a few resources listed here on timber sales, timber salvage contract suggestions, and also access here on a list of consulting foresters. I'll breeze through that because you can access that later on your own. So what are the priorities with your down timber? You've lost 100 acres out of 100 acres. You want to go after the trees that have the highest potential product value. So in most cases, you're looking at saw timber and veneer. Another consideration is looking at the trees that are the very easiest to cut. In many cases, they're all wind blown in one direction. And also the other thing to remember is, like I said, it's like lighting a fuse. Saw timber, veneer trees should be removed if possible 4 to 6 weeks before they develop this blue stain, which can begin to devalue the timber. And then pulpwood trees should be gone within 12 months or a year. So you can imagine the glut this might create on the market. So we'll have to see where that goes. One great little resource I can share with you now, and I think I'm close to the end of what I've got to share, is the recovery assistance that's available through the USDA Farm Service Agency. So it's the Emergency Forest Restoration Program, EFRP, administered by USDA Farm Service Agency, FSA, more familiar to everybody. But this program will help you implement emergency restoration practices and cover 75% of the cost. So this is a great resource to begin looking into now. Not that everybody won't be, but the sooner you get in line, the better. It'll cover all kinds of practices that you might be interested in, such as debris removal, moving your damaged trees, site prepping for replanting, labor to replant, everything from fencing to tree tubes after you do your reforestation, et cetera, et cetera. So if this sounds like a practice, if you plan to go back into forestry, this is a program you probably want to look at. Other tax considerations, and I'm going to spend almost no time here because this is a Kevin topic, I think, more so than myself. A couple of resources down there: National Timber Tax website, National Timber Tax Education Series webinars. So some of the tax considerations to think of: obviously document. So that means photos. And then there's sort of two big categories that I think Kevin will cover well, but I'll just introduce them to you briefly so you won't hear them for the first time from him. Timber losses generally will fall under two big categories. One is casualty loss and the other involuntary conversion. And so timber owners who are unable to salvage their timber, you can claim it as a casualty loss. So my timber stayed on the ground for a year. I could find no market. There was no road for me to extract my timber. Or if the damaged timber can be salvaged, you did it under duress, so to speak. You did it in a suppressed market. And so that might be involuntary conversion of your timber. And of course, there are very differing tax rules governing how all of that works. So with that, I'm going to go ahead and stop my share here. I'm hoping Kevin is back And I'm gonna turn the reins over to Kevin to try to fill some of this out and make what I've talked about in Hurricane Helene more applicable to you.
All right, yeah, sounds good, Kurt. And hopefully the presentation just showed up.
Yes, you're on.
Okay, sounds good. All right, so yeah, I'm just gonna kind of follow along the lines of what Kurt just laid out, and we'll cover some of the. I think we were originally scheduled for just a timber tax basics workshop, and so then we found out, or then the storms happened, and we wanted to add in some of that information too. So, but really, I think so that we have a good progression. I'm going to start with some of the basics, and then you'll see how that kind of impacts some of our loss calculations and what you may be able to do for tax purposes from that standpoint. So we'll just keep rolling here. Kurt already mentioned this, but just like to mention that we're solely doing this for educational purposes, and we're kind of talking as things currently exist and as things are currently laid out as of October 30th right now. However, rules and laws could be passed quickly, and some of this stuff could change from what we talk about today. So, and there may be additional programs, could be payments, could be additional assistance or something that happens after we go through this webinar today. So, and we're going to talk about the rules and laws as they exist and in general, but each situation is based on the facts and circumstances of each particular situation. So based on your ownership, based on your land, based on the facts and circumstances of what's happened with your operation can change the impact for tax purposes. And hopefully, as we walk through this presentation, you'll be able to see a little bit of that. And I would say, and Kurt already touched on this a little bit, but whether we're talking about some of our casualty loss information or really just trying to understand what's happening from like a profitability standpoint or being able to file our taxes accurately and correctly, the record keeping plays such a big part of that. And that's true for a lot of different areas, a lot of different reasons. But I would say, and again, hopefully as we walk through this, you'll see it's really at the heart of a lot of these issues. And so it is more work on the front end to where we have to set up a system and figure out how we're going to capture this information, how we're going to categorize it correctly, how we're going to keep up with it over time. But hopefully doing that work on the front end, you realize that when there's times that you need it, whether or not you're making a sale, whether we're maybe talking about like the casualty loss information, perhaps a lender or insurance is asking you for some of this information and you have to provide it to a third party. In those instances, I think you're going to realize a lot of benefits from having this information on hand. But I would also say, what you decide to do with the records is up to you. So sometimes we'll sit down with landowners or farmers and they'll say, well, if I put it on the computer, like it's automatically going to end up in the hands of the IRS or somebody else is going to see it or something. Well, I can tell you, we're not sharing that information with anybody. We only see it if the landowner decides to share it with us for one reason or another. And so it might just be that you have the records for yourself and your spouse, or yourself and, one or two other people that you decide to share it with. And ultimately, that's at your discretion as far as what you want to do with that. And sometimes we'll get the question too of like, well, what type of record keeping system do I have to have? And the IRS actually says that there's no particular system that you have to have, just one that clearly shows your income and expenses for the year. So sometimes that's just an Excel spreadsheet. Sometimes that's a formal accounting software, and it depends a little bit on how active and how intensely managed and how much time and stuff that you have to devote to the activity. But really, so the best system is really the one that you will use, the one that makes sense to you, and the one that you can really be consistent with and get the information out of it that you need. And if we're specifically talking about like loss information and casualty loss information, Kurt already touched on this, but the more you can document as far as regarding your property, and hopefully maybe that some of that was done beforehand, and that might have been part of a forestry management plan or something like that. But before and after these events, when we have such a severe weather event, the more documentation you have, whether it is insurance, whether we're talking about trying to qualify for different programs, whether we're trying to document this for tax purposes, all of that's going to be really valuable. And I wouldn't say it has to be anything really complex. Most people, you have a phone or a camera on your phone that would do a pretty good job of just being able to go through and snap some pictures and things like that. You might have access to a drone or some of that other technology that might help too. Any of that, I would say, would be good supplementation and documentation to that part. But also include communications. It might be with a consulting forester. It might be someone with your Department of Ag. It might be with your extension agents. But include those communications. And even, if we're talking about Helene, that was a big story. That was, made national news. It was very well known as far as that goes. But there might be more localized events where it would be a good idea to have the weather report or a local news story or something like that if you're trying to document something real specific that may have just impacted your property and like a handful of properties around you or something like that. So all of that information would be good to have on hand. I like to mention this too, and this is something we like to share with landowners and farmers, of just having a short-term contingency plan. And we did an extension article a couple of years ago just listing a couple of these resources where we had gotten calls in extension, and this happened some like during COVID, where somebody with the operation was unavailable. They may have had an accident, they may have been hospitalized, they may have passed away or something like that. And somebody with the operation, like if the brother always took care of the livestock and suddenly he was not available, the other family members or the other business owners were kind of scrambling, trying to figure out what to do and what their responsibilities were as part of the operation. And so these short-term contingency plans or short-term operating plans, it's just a listing of important resources and contacts and information related to the activity that if somebody had to, let's say you as the landowner and somebody had to step into your shoes, what do they need to know in order to continue the activities and kind of continue your responsibilities and things like that. Now, from a timber standpoint, we're not quite as time sensitive as maybe some other types of operations, but still, if somebody had to, if you've got a plan that you're going to make sales within the next couple of years, or you've got a forest management plan and there are certain things that need to be carried out, then I think it's important to communicate that information in some way. And those people that are going to have to pick up and kind of continue the operation, I think they would greatly appreciate having this information on hand. So, it can be as simple as just maps of the property. And you say, I always went into this gate and the lock on the gate sticks, or the number code for the lock is this, just some real basic information. But if they needed to know that, then that's really important to communicate. And again, it's at your discretion as far as who you decided to share that information with. It might be just family members. It might be a business partner. It depends on your operation and what you're comfortable with. But I just wanted to mention that. And it does kind of feed into your estate and transition planning. So like, what do we want to happen with the land or the property for the next 5 years or the next 10 years, or we're wanting to transfer it to the next generation and things like that. But we're thinking more sort of like short-term or almost emergency situations, communicating some of that information as well. So we were going to do a couple poll questions just as part of the presentation for today. And I don't see the screen controls actually. So Kurt, would you mind pulling up the first poll question? And so this is just some general knowledge for us on the backside. So we already asked about how you heard about the webinar and things like that. But if you'll go ahead and select, we're just curious what the makeup of the audience is. So are you and just select whatever's most appropriate for you. So are you a forester? Are you an extension or university employer? Perhaps you're a landowner. We might have some tax professionals. And perhaps you're not in any of those categories, but you saw the webinar and had some interest in it and just wanted to join for today. So we'll give about 30 seconds or so for folks to respond to this. And so it looks like, I'm going to go ahead and end the poll, so I'll share the results. So it looks like most folks are a landowner or forester, and that's good. That's probably what our expectation was, and I somewhat tailored the presentation to go along with that. So, and we'll have a couple more poll questions as we go through the webinar today. And probably don't need to explain or tell this to anybody, but when we're talking about tax information, it can be kind of technical and kind of complex. And so uh, generally, we're going to recommend working with a tax practitioner or a tax professional to help you with this information, and mainly because it can get complex, and especially if we've got some of these specialty sort of situations that arise. But inevitably, we sort of get the question of like, well, how do I find someone to work with, or who is someone that I can work with in my area? And there's a group of land grant professionals across the United States. A number of us work as part of that group, but one of our colleagues, Tamara Cushing, wrote an article a couple years ago on how to choose a tax professional. Some other resources would be the IRS, in fact, has information on their website on finding a tax professional. Your state society of CPAs may also have information. And one of the best ways, I would say, is still just speaking with your neighbor or word of mouth. If you know some other farmers or landowners, you can ask them, hey, do you have somebody that you're working with? Do you have somebody that has done a good job for you, that has experience in this area? And I would say for timber, that's important and pretty critical. Sometimes we think about the IRS coming in and asking questions about what we do and things like that, and those situations can arise. But I would say sometimes the landowner just leaves money on the table because maybe there's some tax provisions and things that they could take advantage of that they're not as familiar with, or their preparer is maybe not as familiar with. And so from that standpoint, I think it's a good relationship to have, and something where, just like a consulting forester, they're going to help you out as far as making decisions in your management of the property. And I think that tax professional is kind of the same way. So these are the issues I wanted to highlight for today. And we're going to do a sort of broad overview of this, and hopefully it sort of logically makes sense as we go through it. And I do want to touch on the disaster and casualty loss information. We'll try to have time at the end for questions, but I also am going to include my contact information if you've got follow-up after we go through this information. So it is, we do have to figure out what type of activity that we have in regard to our timber land or our timber ownership. And so there's really three main categories for this. So we would have a hobby, or something just as like a personal asset or personal enjoyment that we get out of it. You might camp on the property, you might hunt the property, and maybe you get some pine straw and some firewood and things like that from the property, but you're really not interested in making money from it. You don't necessarily intensely manage it or anything like that. But again, it's primarily for personal enjoyment. And I'm not going to focus on that area as much, mainly because the tax side is a little bit limited from a hobby perspective, but also I think these other categories are where we see the large majority of landowners to fall and where they have interest in being. So the next category would be an investor, and this would be someone that they would have a piece of property and they do expect a return over time, but it might be that they're going to harvest in the next like 15 or 20 years or something like that. And they're doing it as a way to maybe supplement their retirement income. Perhaps they've got children that will be going to school relatively soon, and they're expecting that income to help for like school expenses and things like that. So they do intend to make money from it, and they do want to return over time, but their frequency of the activity is a lot more sporadic, I would say, and they're not necessarily doing something with the property like every single day. They're not, it's not exactly a set it and forget it sort of thing, but they're just not as involved, I would say, with the property. Whereas with a business, we would see very frequent sales. They spend quite a bit of time in the activity. They probably very intensely manage that, and they might have like multiple sales in a year, or they may have like a sale just about every year, along with reforestation and things like that. So these are kind of the guidelines, and then you have to think about your particular situation and maybe where you fall within that. And sometimes there's a little bit of a gray area, and you can do a little bit more reading as far as these different categories. Again, today I'm going to focus mainly on the investor and the business side of things. One of the most important and critical pieces of talking about timber tax is our basis calculations and how we arrive at basis. And so maybe you've heard that term before and know a little bit about it, but I did just kind of want to give some basics, a basic definition of it. So it is essentially your amount of investment in an asset, or maybe in this case, we're talking about a piece of property. And so what is your investment in that? And we could be talking, this is true whether we're talking about timber and timberland, or we might be talking about other things like could be equipment, could be stocks and personal investments and things like that. But as we are talking about basis, keep in mind this is not just for timber and timberland, but this applies across the board. And so if you really want to do more reading in this area, the IRS has a publication 551, basis of assets, and you can get a lot more detail about it from that publication. So just again, as we're talking about this, so basis means your amount of investment in that asset. And so why is it important? There's a number of subsequent calculations that are impacted by our basis determinations and our basis amounts. And so if we're talking about certain depreciable assets, it determines how much depreciation expense that we might realize over the life of the asset. In the case of natural resources like timber, it's a depletion is the term that we would use, and it's a similar but a little bit different calculation, and depletion is specifically what we talk about with timber. But also if the property were to change hands, or if we're to make sales of that asset or that property, it also determines our gain or loss on that property. And so that's why it's a critical piece to this, and why we want to just spend a little bit of time talking about it. And so your basis depends on how you acquired the property. So how did it come to be in your hands as the owner? And so I want to run through a couple of examples. We're going to incorporate our poll questions into this. So let's say in a given scenario, you bought land for $100,000, and then later you sold the land for $150,000. And so the first question would be, what was your basis? And I'll ask Kurt to pull up our next poll question, which should be number 2, I believe. Okay, so yeah, so it popped up there. So based on this example we're talking about, you bought the land for $100,000, later you sold the land for $150,000. So the first question is, what is the basis in that land that you purchased? We'll give folks about 30 seconds or so to respond. And as we said, our basis is going to be our amount of investment in that asset. All right, so we have the large majority, about 90% or so. Go ahead and share that. They said the basis was 100,000, and so yes, that is correct. And so then we'll do our next question, which is number 3. So I'll go ahead and launch that one, Kurt. So later you sold the land for $150,000, and so what was your gain from selling that land? So our basis was 100,000. Later we sold it for 150,000. What was the gain on that? Yeah, and so not quite everybody has responded yet, but pretty much everyone got it right on that one, which was our gain in that instance would be the $50,000. So that was the difference between our sales price versus our amount of investment or our basis in the land. So the difference was that 50,000. So very good. And we'll keep rolling here. So that's just the answer to those two polling questions. As we said, the base was 100,000, our gain was 50,000. So similar fact pattern, but a little bit different scenario as far as how we acquired the property. So you were gifted land, perhaps it was your parents or something like that, and the owners of that land, the original owners of that land, they bought it originally for $50,000. At the time that they gave you the gift of the land, the fair market value was $100,000. And then similarly, sometime in the future, you sold it for $150,000. So we'll ask basically the same questions. What was your basis? See if I can find this here. Yeah. So what was your basis? This is in the case of a gifted asset. Your gifted land, the owner bought for $50,000. At the time of the gift, the fair market value was $100,000. Later, you sold the land for $150,000. So similar questions as before, but just a little bit different scenario. And so we gave you perhaps some additional information that, not necessarily to try, like just to show for gifted purposes what we really need to pull out or what's really relevant for this scenario. So I'm going to go ahead and end the poll. I'll share our results. So in the case of a gift, you get what's known as carryover basis. So whatever the basis is in the hands of the donor, you receive the asset, the value of that, their adjusted basis, and also their holding period for that, which we're not going to talk about that a lot, but it can be important for other reasons. So in this case, they bought the land for $50,000. It was given to you, and at that time, the fair market value was $100,000. Fair market value plays a role in some other calculations and some other things that we'll talk about, but for gift purposes, and it may be that there may be some gift tax and things like that, but for purposes of basis, it's that carryover basis. And then later you sold the land for $150,000. So knowing that, I'm going to launch the next poll. And so what is the gain in this particular instance? And so we've already kind of talked about this just because we've explained the basis for this scenario. But so basically the gain would be the 150,000 minus that 50,000. And so in this particular instance, our gain would be that 100,000. So I'm going to go ahead and stop that poll just so we can move forward. And so one more scenario here. So let's say you were, okay, so these are just the answers for those questions. But next scenario, let's say we have an inheritance situation. A family member passes land to you in an estate. They had originally bought the land for $50,000. At the time of the inheritance, when you took possession of it, the fair market value was $100,000. Later, you sold the land for $150,000. So I'm going to go ahead and launch the poll question for this. So what was your basis in the asset? And so you can see, kind of as I mentioned about the different facts and circumstances surrounding your ownership, surrounding these transactions can make an impact as far as how it's treated for tax purposes and what our gains might be, and things like that. So I'll go ahead and end that poll and go ahead and launch the next one, which is, so what is your gain in this scenario? Give people about 30 seconds or so. And we'll talk about the answers. And so, yeah, about 75% or so got that correct. So just to follow up on that, we, in the case of an inheritance, we get what's known as a step up in basis. And so at the time of inheritance, we get a step up to the fair market value. And so in this particular instance, we talked about the gifting before, but in this particular instance, that fair market value is important because that now becomes our basis when we take ownership of it. And so if that's the case, then our basis was that $100,000 when we received it from inheritance. And then when we sold it later for $150,000, our gain was the difference between those, which ends up being the $50,000. And so you can see, how these different scenarios might play out. And hopefully you can start to think about, okay, for your property and things, what were the scenarios that may have played out from that standpoint? And basis should be determined when the property changes hands. And we just kind of went through the different scenarios of how that might happen. But that is maybe not always what happens, and or sometimes basis gets lost. It might be that the property changed hands 30 years ago and we did have record of that, but it was in a file cabinet. It has since been thrown out or something like that, and we no longer know what those transaction amounts were. Or, it's been a while since you've taken a look at it. You think you have it on hand, but, again, it's been a while. And so it could be that we're not real familiar with what those amounts might be. The other issue is there are multiple assets typically in a timber property transaction. And so typically, it may be that there's just land, in which case that becomes the allocation. All the basis goes to the land. But in the case of, like, let's say a purchased property, we've got a $500,000 sales price for that piece of property. Typically, we may have several different assets as part of that property. And so we might have land as part of that. We might have buildings as part of that. There could be some other assets too, and could be like timber. There might be mature timber. There might be young timber, but that's a separate asset as well. That's part of that transaction. And typically, we don't see this split out in the sale. So typically you just see that total sales price, say, of $500,000, and it doesn't say $300,000 for the land, $100,000 for buildings, $100,000 for timber, for instance. So I think this is our last poll question here. But and Kurt, if you could find, let's see. So as we talk about this, do you or your clients, do you know your timber basis? And so you can say, yep, we've got it on hand. We've got good records of it. Maybe it changed hands recently, so you've laid eyes on it recently. You could say, no, not sure. Maybe it's been a while. The property hasn't changed hands in a while. You might think that you have it, but not entirely sure. So or if you are not currently a landowner or don't work with clients, then you can just go ahead and select not applicable in that situation. So I do see a number of yeses. I think over 50% right now are saying that they do know their timber basis. So that's good. And we'll talk about a couple ways that we can try to arrive at this number if we don't currently know it, which does, again, impact some of these other calculations and things that we might make. All right, so yeah, right around 50% say yes, they do know it. Then we've got some other no, not sure, and not applicable there. So in that case of a purchase, we've got the $500,000 and we need to know, well, what's the split out between these different assets? So we've got the land, maybe we've got merchantable timber, maybe we've got pre-merchantable timber, and we also have buildings as part of that sale. And so we can do, this is a way to allocate this across those assets. So you would get an appraisal from it might be a rural land appraiser or something like that, and they could give you the value, the current fair market value of the land and probably the buildings as part of that transaction. Now, for the timber, you would probably want to get a consulting forester because they would be most familiar with giving that valuation. And so in this example, so we would take the total fair market values of those different assets, and you might have, you might have more than this, you might have less than this, but this is just an example scenario. And we would say, okay, the land was valued at 200,000 out of our total of 520,000 based on the fair market value. That gives us 38.5% of the fair market value. You take that percentage and apply it to your sales price, and then that gives you the allocations between your different assets. So that would give us a basis in the land of the 192,307, and then so on and so forth for the different assets there. And so that would be like in the case of a purchase. If it would be an inheritance, then this would typically be done as part of the estate. And this information would be handed over to you as part of that. So like the fair market values, they're going to be valued as part of the estate. And so our 200,000, our 150,000, 70,000, 100,000, that now becomes your basis in those assets once you've received that step up in basis as part of your inheritance. If we've received a gift, as we stated, we get the carryover basis from whatever it was in the hands of the donor. So hopefully, whoever decided to give you that gift has some historical records of what the basis was in their hands. And hopefully there's been an allocation of that. If, it could be that it's been a long time since the property has changed hands, and there's been a number of like timber sales or something like that. And so really for the timber standpoint, there may not be a lot of basis, or it might be really low. You can do a back cruise, which a consulting forester could help with, which could help determine what the value of that timber was at different points in time. However, you're going to end up paying for that service. And so you do sort of have to make the decision of whether or not it would be worth it. And it kind of depends on how long the property has been in timber, what's been the activity on it, when was the last time it changed hands, and things like that. So there's not a real black and white rule as far as when you might do that, but just something to think about there. So this is kind of just what we talked about, an appraisal closely following the sale. Then you would allocate that sales price based on the fair market values. If you only had a transaction where you had land and timber as part of the transaction, you could have what's known as the residual method, where we've got the sales price and then we have an amount that's appropriated for the land. We would take the market value of the land, subtract that off from the sales price, and then the remaining amount would be allocable to the timber asset. So that's an example there. 500,000 sales price minus 300,000 of land would give us 200,000 for the timber. And there may be a further split from that as far as like the merchantable and the pre-merchantable as well. And I think we've already kind of touched on this, but our basis, it can go up or down. Depreciation, depletion would cause it to go down. Improvements and capitalized costs would cause the basis to go up. And then that is going to affect our later transactions when the property might change hands. Could be for casualty loss, could be for making sales, things like that. But then it is referred to as an adjusted basis. So just a little bit more information there. So we talked about record keeping. The Form T, if you are in the business of timber, meaning it is a bona fide business activity for you, you are required to use the Form T as part of your tax filings. However, if you are on the investor side, and again, I think the large majority of Southeast landowners are on that investor side, it's not required that you file the Form T, but I would say from a record keeping and a practicality standpoint, it's a lot of the information that you need to know, and it's a lot of information that you probably want on hand anyway. So it's really a good form to track and keep up with. You can find the form itself and then the form instructions on the IRS webpage. just as kind of a brief explanation. So the first part, or page 1, is your acquisition cost. And you would do this for each block or timber account that you might have. So if you've got multiple properties, you would want to do this for each of those properties. If you're separating those into separate timber blocks, for instance, sometimes, or I would say maybe a large majority of the time, we might just have that all together. Page 2 is going to be our basis information, and this is where we're tracking any changes. Like we'll have maybe our original or our cost basis initially, and then we might have some of those things like expenses and things that could get added to our basis, and we're going to track and see how that changes over time. Page 3 is going to be our sales information whenever we do make a sale from the property. And then page 4 is our reforestation. So I think I just mentioned this, but it is required if you are a timber business. But again, it's just a really good record keeping resource. Even if you don't or are not required to file it, it's a good resource to have. So our casualty loss information. So probably maybe what's most interest to some of our attendees today. So we're going to talk about this. There could be other further changes as far as how the IRS typically provides some tax relief and things like that. They may make some additional changes or updates to that. I haven't seen anything so far, but we'll talk about the rules as they currently stand. So a casualty loss is loss of property in an identifiable event sustained during the tax year. So for 2024, we think about there were several things that happened recently around the Southeast and the East Coast. Helene would obviously probably be the big one that we would think about. And it must meet the 3 requirements of being sudden, unexpected, and unusual. And so typically our natural disasters that we think about, tornado, ice storm, wildfires, hurricanes, those are going to be examples of a casualty loss. Some of these others, we see that they do crop up and they can cause an economic loss or a business loss, but they won't qualify as, say, a tax casualty loss. So these would be like disease, insects, and drought. Unless it's just something really unusual or something really extreme, typically those are instances that do not qualify. And so I want to touch on the business and investment side of the casualty loss. And so it is the smaller of, and this is why we were kind of walking through all that a little bit earlier, it is the smaller of the adjusted basis, and that would be the basis in your timber, or the decrease in the fair market value before and after the casualty. And so in order to determine if we have this casualty loss, we would have to know what is our adjusted basis. And then typically a consulting forester is going to be able to help provide those values of maybe what the fair market value was before and after the casualty. And you may be able to do some of the work of that yourself if you can have references to prices, volume, and things like that. Then you can help kind of determine what that fair market value is. But a lot of times, as you might be able to tell, the sort of limiting factor here is going to be that adjusted basis, because our basis may be low, or if we had no basis, then the smaller of that is going to be that amount, and so not necessarily the difference in the fair market values. You can claim a casualty loss per single identifiable property. Sometimes, a lot of times, this is just one property for landowners, but it may be, and you can read a little bit more about what that means. But typically, I think for most around the Southeast, that's just going to include all of your timber activities. But just wanted to mention that. And so, unfortunately, if your basis is 0 in your timber, you would not have a casualty loss. But if you do have that basis, you've tracked it over time, and then you've determined, yes, we did have a casualty, then you can go ahead and make that calculation. If you received insurance or salvage proceeds from that, then that would subtract from your casualty loss, and that's on the form itself, the form 4684. It helps you make that calculation, and that's included as part of that calculation. And so if you qualify for a casualty loss, you can take the loss in the current year. So that would be like in 2024, we would be, for our 2024 tax year, we would be filing early in 2025, right? We would be, sometime February, March, or April of 2025. If it's a federally declared disaster, and in the case of Helene, it is, then you are allowed to take it in the prior year. So you could amend your 2023 tax year and include this information. And the reason they do that is so that you could go ahead, submit it, get it processed. And if you have any benefit from that, if there's, say, cash or money coming back to you, you could go ahead and get it through the system that way. And so maybe it's a little bit faster process for you. But it does have to be a federally declared disaster in order for that to take place. If you are in some of these areas that have had some kind of a disaster, a lot of times the IRS will announce some kind of a tax relief for that area. And for a number of parts of like North Carolina and South Carolina and Georgia and Florida, they have already announced this, and you can kind of double check the IRS website. But essentially, that allows extra time to both file returns and pay the associated tax with that. And that could be for the taxpayer themselves, or it could be also the tax preparer wasn't in a disaster area, and so they also grant relief in those situations.
Kevin, we have a question coming in from Daniel. That's a good question. It's one that we actually talked about before we went on. If you have assistance in reforestation, or I suppose in anything, do you claim the full amount or amount that you paid only?
Yeah, so there, I was going to touch a little bit on some of the program payments and things that you might receive. And so what I would say, so typically you may get program payments, in which case you can, it depends on the program, it depends on what the intent of the program was for. But if you receive payments and you're allowed to exclude that, for instance, then you exclude it from income, then you don't get the associated expenses with that. Or vice versa, if you include it in income, then you do get the associated amounts for that. So I think some of those are more like cost share and that sort of thing. So anything that you directly paid for that was not part of the cost share, then that would be like an includable expense. But otherwise, you just have to be aware of some of those issues, I would say. And we can talk more specifically about that too, but it sort of depends on the program. It sort of depends on the intent and things like that. So for the casualty loss, it's reported on that 4684. For investment, it ends up on line 16 of the Schedule A, which is your itemized deductions. And so a number of taxpayers we actually see, because the standard deduction has increased so much, they end up taking the standard deduction as opposed to the itemized deduction. But if you have a rather large casualty loss, it may be that your itemized is more beneficial for you. So you kind of have to go through and calculate the loss and then see is our itemized deductions for this year more beneficial or not. And then for our business, it does, it starts on that same form 4684, and there's different sections of that form as far as for personal or investment or income producing versus for business purposes. But it starts on that form 4684, and then it goes to form 4797. And then if you do have timber for personal use, there is some provision for that as well. And so it's limited to losses from federally declared disasters. But as we mentioned, like Helene is a federally declared disaster. Then they make a couple of calculations from that. It has to exceed or you take $100 from that loss, and then it has to exceed 10% of your AGI, and then it would end up as an itemized deduction on your Schedule A, line 15 of your 1040. So they essentially do that because they don't allow like smaller personal losses to be includable, but they say or recognize if it was a rather large loss, then they do allow you some tax benefit from that. And it could be that through some of these payments, whether it be insurance, maybe it's a government program payment or some kind of salvage value or something like that, that it does exceed the amount of the casualty loss, especially if we had lower basis or no basis and we received an amount greater than that. And so it could be that we have a reportable gain in that situation. So if we had, say, no basis and we received $10,000, then essentially we've got $10,000 of gain, right? However, you have within a 2-year time period, you can avoid this if you purchase qualified replacement property. And so this could be timber, it could be timber land. You could pay for reforestation with that money, and then that would exclude it from being a reportable gain. So they also allow you to buy 80% stock of the timber company. I don't know that that situation happens a lot, but that is part of the provision as well. I wanted to mention a couple code sections. We didn't really talk about them today, but as you dive more into this timber tax area, we do typically get capital gains treatments on our sale of timber, which is very helpful, very valuable, and very important. Long-term capital gains are always going to be a favorable tax rate. Our timber property or our timber assets, they're different depending on if you're an investor or you're a business. Those are the code sections for that. Cost share exclusion, that was a little bit of what I was mentioning there about some of our program payments and things. We can exclude it, but then typically we don't maybe get the deductions and things associated with that. That's code section 126. And then reforestation can be a really helpful and really important planning tool once you've made a cut, and then we're going back to replant. And so that's another code section there. Just as a wrap up, the record keeping is going to play a really important role. I would say there's a number of resources through probably your state, and that might be your Forestry Commission, that might be your extension agents, your Department of Ag, even federally. So utilize those resources, take advantage of as much of that as you can. The preparers, and especially if they've got timber experience, I think they can be really valuable for you. At times, the IRS has done what they've called a qualified disaster loss, which even if you take the standard deduction, they allow you an additional deduction on your taxes for qualified disaster losses. I have not seen any news about that happening or anything like that, but it could be something that gets included or changed by the end of the year. So be on the lookout maybe for that. I have no predictions really one way or the other, but that's just something that's happened in the past. And then, as I kind of mentioned, those program payments, it kind of depends on the program. It kind of depends on the intent of the program. It kind of depends on a couple of different factors. So if you've got a specific program or something that you're thinking about, we'll try to answer those questions. These are just a couple of resources that I used for today's program. So timbertax.org is very helpful, very valuable. Perhaps you've already visited in the past. And then the IRS website is always very good too. And those are just some of the forms and instructions that I mentioned as we were going through today's presentation. So that finishes us up. It is 2:00. I will stay on for just a couple minutes if people have some other questions that weren't covered in the presentation. Kurt, I know you may have to hop off, and that's okay.
I'm gonna hop off. I've made you host, Kevin, so if
Okay.
you have a couple of minutes to field some questions, that would be great.
Okay.
Appreciate everybody staying with us for this hour. It'll be about a week to 10 days. This will be posted and you can repeat it, go back, look at it, along with all the links that you might want to reference. So appreciate your time, and we'll see you the next time. Kevin, I'll leave it with you.
Okay, sounds good. Yeah, so if you have any further questions, and it might be something a little bit more personal in nature, you don't necessarily want to submit it through a webinar, that's okay too. You're welcome to reach out to me either by email or by phone. I'd be happy to speak with you a little bit more. And truthfully, if I don't know the answer off the top of my head, I'm probably not going to say because I don't want to misstate or tell somebody the wrong information. So I may want to do a bit of research if it's a more complex question or something like that. But yeah, I appreciate you all being on today, and hopefully some of that information was helpful. I do see a question. I will include the Land Grant Press article, and I can put that into the chat, I think, even. And the capital gains, that is section 631, is where you can find capital gains treatment for timber. And so 631A is for cut timber, and 631B is for standing timber or stumpage. Those are the code sections. And here is a link to the article that I mentioned earlier. If there's any other resources that you're wondering about, I'm happy to include links into the chat or something as well. And these presentations should be available as part of the recording and the information that gets shared later. So I'm happy to share any of that. I also recognize too that a lot of these questions and things, people I think are still certainly recovering, and they may have not have even started to think about some of the tax information. So hopefully the recording is helpful from that standpoint. This may be a little bit further down the list as far as items that they get to, but continue to reach out, whether it's Kurt or myself, or there's some other timber tax professionals around the U.S. And I also realize too that some of the foresters and being able to do salvage value and things like that, there's probably a lot of people that are contacting those foresters or trying to salvage what they might have after the disaster. And so I recognize that's a challenge for folks too. So some of the federal code numbers. 126 is the cost share exclusion. 1221 is the asset type in the hands of an investor or for personal purposes. 1231 is asset for business. 126 cost share. 194 is reforestation. And 631 is the capital gains. A lot of that information is also on the timbertax.org website, but those are the code sections if you want to look up a little bit more. Yeah, there's some information out there about how those sales are treated for tax purposes, whether or not you're an investor or whether or not you're a business. We had covered some of that in a previous webinar, but we didn't necessarily have time to cover the sale information today. I'm glad to share that with you, or there are some other webinars on forestrywebinars.net that cover some of that same information. The timbertax.org also has some of that same information. And so you can find how some of the sales are treated from some of those resources. And again, if you've got a more specific question, I'm glad to have a conversation through email or through the phone or something as well. So I haven't seen a lot of other questions or anything at this point. Again, hope this information was helpful for you. Please continue to reach out, and we'll hopefully do some more educational webinars in the future. But thanks for joining today, and hope you have a good afternoon.